All right, guys. So we are live, and just wanted to welcome everybody to episode 2 of the PoWcast. Hoping to get these done weekly or bi-weekly at the latest, and it's been awesome having these guys around, and they've been really helping out in bigger ways than I can explain just outright. So it's awesome to have them all as guests on the podcast again. We got Mining Trucker in here too. You may have seen him in the chat or something like that, and he's a close friend of mine. Very very good guy. He knows a lot of different things about mining and stuff too. Obviously, been a really good source of insight throughout my journey in crypto for the last decent amount of time, and so I wanted to welcome him as a guest as well. But we got Sponge and Richard here too. The floor is yours, guys. Whatever you want to do.
Well, I just like to thank you for inviting me, though I'm very new to the project. I had my initial doubts, but after learning more about the project and um, understanding a little better the insides of it, I'm full on. In fact, I even brought a couple of my personal friends into the project, so I'm happy to be here.
Awesome. Yeah, I love to hear it. So I guess Sponge and Richard. I like to, or really anybody in here. Just I like to open the floor up so that you got an opportunity to start a spark, and then we all can kind of run with it. It'll flow into different topics and things like that as usual. So whoever wants to start, free to start. And I guess like to kind of kick things off. What do you guys feel about the current state of the community, the project in general, the development? I know they have a new wallet coming out. BitcoinPoW Core GUI wallet, a GUI. It's going to show your hash rate in real time for that wallet, and I believe it may don't quote me on this, but it may show you the capacity that wallet has reached for a given core. That would be kind of a stretch. Would be a cool idea for the future. I think he mentioned something about it briefly. If not, it's at least going to have the estimated hash rate, and it will confirm that your wallet is running properly and everything. So that's a great improvement. Very excited about it, among other things. What do you guys think? How are things going lately?
Well, since the other guys are quiet,
Yeah, I
I've
think they
noticed
might
that.
they might be on mute and they might not know. So I'm just giving them a heads up in case they're listening in to maybe unmute their mics and in a minute or so. But anyway.
So I was going to say that it is obvious that within the last week, maybe two, more and more miners are getting into the project. The competition for transactions is getting stiffer. Um, plus, you know that the price on Zagex dropped a little, which provides for cheaper coins, i.e., better opportunity to build, cheaper opportunity to build. So transaction prices were pretty high lately, and I think that they will continue to increase because I believe that almost everyone understood that within the next 3 4 months, the window of opportunity is open for everyone. After that, the buildup of existing miners will be significant enough, and since Bitcoin PoW is a solo mining project, the probability of hitting the blocks will be lower and lower. So everyone is trying to build up. That's what my feeling is of the current state.
Yeah, I agree. I mean, I think it's definitely getting competitive. The fees are going to be variable, by the hour practically. But at the same time, they're moving in a certain trend or direction. I think, I'm trying to find somebody who can make a US dollar chart for the UTXOs or the transactions. So I think that would be a really nice way to kind of see how the market is moving. It's not going to be correlated to any kind of, technical analysis of the coin price. Well, maybe BitcoinPoW's price, but I don't think it's going to be something that you can look at like a typical trading chart. However, it's going to help broaden people's perspective about the value of a transaction and things like that. I would say they probably cost about 1% or 1.5% of a coin to execute if I'm estimating that properly. It could be a bit less, but I would say at least like 3 cents to 5 cents per transaction at this point. So it's very interesting concept, and I think overall the coin price of a transaction is going to be significantly lower in the future. But at the same time, that dollar cost will likely be higher, and additionally, the hash rate will be much higher. So each transaction doesn't have as much tangible value for compounding and things like that for scaling up a mining operation. Um, basically, I think that it's reasonable still right now, and if people see the advantage of compounding on top of, I wanted to mention Sullivan is a developer who's kind of volunteering with BitcoinPoW, making a bunch of different things, and for the community, he's trying to even out the distribution of transactions and coins and things like that. And he's got a handful of transactions himself, so he's created a faucet that can send 20 transactions to each user every hour. Within 2 weeks, you can build a wallet with like 7,000 transactions. I think if he's really willing to deploy a handful of coins for that, it's a huge sign of initiative that somebody is putting out to the community. And overall, it's just going to make for a much better distribution. So anybody tuning in, follow up with us or Sullivan. Just tag him in the main chat about that faucet or the bot itself, which configures all that stuff for you automatic. It's really nice, and I think it's worth taking advantage of because those transaction costs are surely going to increase. And people look at it like you're going to have more coins spent for transactions right now, but if you look at the raw turnover rate and how long it takes to get back the initial investment that you put in, as long as you leave your rigs mining and kind of project some basic statistics, it's not too long of a turnover, and it gives you that opportunity to have more momentum in the future. So I wouldn't get too tripped up about the how much BitcoinPoW you're spending on the transactions, because as long as you breach a certain threshold, then excuse me, as long as you breach a certain threshold, you'll get the initial back within a set period and kind of maintain your stake and your percentage of the hash rate, things like that. Maybe hit like a block every week or two, maybe every month for some of the guys with a few less transactions, things like that. But when those blocks come, they do come, and then scalability is possible, and it's a great thing. So Richard was mentioning a few things with getting set up, and just wanted to see if he was potentially available.
I believe my mic's working now. You can hear me.
Oh, nice. Yeah.
Yeah. There's been some pretty exciting things going on in the market. And, Bitcoin, broke 64K today. Right now, it's steadily climbing back up to 63K. Our story so far has been very, very similar to what Bitcoin did and is going to continue to be, except we're going at a much, much faster rate. It's been pretty incredible to see so far. And I don't think it's understood or talked about nearly enough because it is a very fair comparison.
All things considered, it's the same similar code base with a different mining algorithm, but a lot of the same fundamentals. A handful of developers that are familiar with projects of that caliber. I've seen some pretty impressive kind of backgrounds from a few of these guys that are just building on behalf of the community, and then the creators themselves, who have experience with modifying certain intricate details of Bitcoin code or applications or integrations, things like that. So, all of it speaks for itself when you really look into it. I think, like you said, it's very downplayed at this point. But no, I totally agree. And I think just getting those concepts out there, even through the PoWcast, even just having people become aware of it, it gives them the opportunity to kind of look into it themselves. Sometimes just a heads up is all you need to really open your eyes up to something incredible. So I'm very excited about it as well. But yeah, I think it's true.
But today we did see alarming evidence of what we already know, how centralized Bitcoin actually is. When it hit 64K, Coinbase, who holds 80% of the Bitcoin that is running through ETFs right now, Coinbase crashed and literally caused Bitcoin to drop to 59K just from that simple little fact. That's pretty terrifying. And, the narrative for BitcoinPoW isn't talked about nearly enough. This is created to be more in line with Satoshi's vision with solo mining. It gives the ability to create a true Bitcoin that is not centralized.
Right. And some people have concerns about some of the miners, but at some point, and I'm talking about BitcoinPoW specifically, but at some point, there's only so much a person can scale up, and as coins get redistributed and things like that through the fees and through exchanges and through people, maybe liquidating some coins to scale up, for example, they might not do the calculations properly and lose a considerable amount of their percentage of the hash rate. I was explained by several people within the project who have a better understanding than me that it starts out with people that have momentum who see it for what it is and take advantage. But it's kind of inevitable that hash rate redistributes over time. A lot of people are not willing to solo mine when they're running a business. I think that some will for sure, but at the same time, that consistency of some sort of revenue is a little more or a little less nerve-wracking to people scaling commercial mining, when they have quotas to meet and things like that. So that alone is going to change the mining centralization component. And the other thing is, if we have the right people in from the beginning and they recognize how to take initiative to decentralize the project itself, I think it's less likely that we'll run into centralization issues like what we're seeing with Bitcoin itself, the original Bitcoin. So a very fair point and a very good thing to be aware of, with the Coinbase and 80% ETF allocation, being held by Coinbase. Those are scary stats. When you look at Bitcoin, you may look at it as just another coin and another chart, but it's a global commodity, a global asset at this point. May not be the greatest one in terms of distribution anymore, but there's major amounts of money in Bitcoin, and for it to take a dive to that extent, I think you said 59K. That's like a probably 6.5 or 7% drop in price, and I saw it within maybe an hour and a half at the absolute most. Could have even been less than an hour that happened. So for that much money to move in and out of the project or into the asset, it takes a lot. So that is kind of scary to think about too, for sure.
I just think that it's unfair to look at the current state of the Bitcoin in comparison with practically any other crypto, because two characteristics that Bitcoin currently has. One is the acceptance that it gained over the years since 2017, 2018. And the other is the entrance into the ETF market. The access to the global finance resources makes it into a different commodity than any other crypto. So when we're talking about BitcoinPoW, it is fair to compare the graphs up until probably 2017. Anything after that is little unfair.
True. That's a good point. Yeah, I would say that
Yeah, I'm sorry. And also, I must disagree on big business scaling into the BitcoinPoW. It is very possible. In fact, the larger the scale of the business, the more predictable the results will be with the solo mining because it averages out pretty nicely. And as long as you know the total hash rate and you know your own hashing capacity, it is very possible to predict, obviously not on the short term, but at least on the longer terms, like quarter, half a year, results that you're gonna gain, and it's even better than competing on the mining pool side.
That's a fair statement because in one sense, I was looking at it with an optimistic perspective that centralization would take time to diffuse. And once it was diffused, it would be, essentially impossible to recreate. Larger operations, I don't see them getting into this until it is sufficiently decentralized to begin with. But at the same time, they're just growing pains that any new project goes through, obviously. And my take on it was that it's going to be really difficult for one given entity to have the majority of the hash rate. You have, I don't know the specific stats. I would assume somebody may hear, but if they don't, it's also no problem. But I know there's farms that they practically look like Amazon warehouses, like full of ASICs. And for us to get to that point with any given entity, it would take a lot, and I don't see it happening. But at the same time, smaller commercial operations could be a thing, and like you said, with enough scaling, there is a little more predictability to it. So the main reason I was posing that argument that commercial mining may not be a thing is because it could benefit us in the short term, but also because, right, like, the home miner has a little bit more of a shot, especially at these stages, in my opinion. It's like anything, it's an investment when you get started, but it has performance stats that are superior to most other mineable coins out there at the moment, despite the inherent costs that are associated with it. But in terms of just scaling in the future, having access to new markets, new people, new networks. I also think that with the right amount of hash rate and people that are looking at yearly statements instead of bi-weekly statements, if they just need a projection that is 3 to 12 months out in terms of how many blocks they may hit, it's perfectly feasible. I agree with you. I think if you're looking at maybe a 2 to 4 week window, especially as the hash rate increases, you're looking at much less predictability. It could be the difference between hitting 3 blocks and 5 blocks, and those blocks could be worth a lot of money. So it would be harder to predict in those ranges, at least in my opinion. It's a very humble opinion and just an observation. I know there's a few people, especially Mining Trucker, but also Richard, quite a bit more knowledgeable and experienced as it pertains to mining in general. It's a fairly new thing for me in BitcoinPoW. I have another project that I've mined for a while, but the true scaling and technicalities of this kind of industry are a new thing to me. So I'm humbly just making my strides. But these are all good insights. I don't know, Sponge, if you're around, if you've got any potential thoughts about any of this stuff. I just wanted to kind of open the floor up to you as well.
Yeah. To be honest, the hash rate's moving a lot quicker than I thought it would. And I knew that it would start catching pace very quickly. So I'm pretty glad that I stuck to my word and started, doing transactions a while ago and not stopping. And in my opinion, the best way to get ahead is to just never stop sending yourself transactions. You can try to time it all you want, but I mean, the less active wallets you have, when the fees are high, the less blocks you're going to hit that are worth like 150 BitcoinPoW and higher. So, you can either check your pockets every 5 seconds when you send transactions, or you can just efficiently keep sending them to yourself with discipline, and eventually you'll get there. Like it may take a while, but eventually you'll be able to somewhat keep up and stay further than just a standstill. So that's my take. I think the hash rate's going to continue to go crazy. I think that the price and the hash rate have decorrelated. I think it's pretty amazing how we found a floor from $1.50 and how it just continues to happen on and on and on. To be honest, just like Richard said, spot on. Like people are slowly going to realize how like serious this is, and then you're just going to see the most like insane like turnaround. You're basically just going to wake up and say, what the hell happened to the project, basically, in the most clear terms, because like we can see like the volume will drop down to like 3,000 BTCW, and then all of a sudden the next day it'll go to like 18,000. So the volume is there and the market is there too. We have Bitcoin trailing the way now, so we don't have to just go up by ourselves, which would be kind of stupid. We kind of have a collective audience of other assets that are going up at the same time. So people are starting to have more liquidity and willingness to, gamble, if you may. And that's what actually gets people to stumble across, good stuff. So,
yeah, I think that, having a different risk tolerance in a different market is going to help a lot when the collective is just a little more eager to find opportunity. There's more attention in the industry. This will get noticed and get further exposure and recognition a lot faster than it would in a bear market. I think the timing was really great on this. But yeah, no, I agree. And I think the hash rate will continue to run. Something I wanted to say on that is that, those that have a decent hash rate now are not going to be competitive in the future, even as soon as, a month or two from now, if they don't continue. So, it's kind of a race for who's, it's like last man standing in a sense, because those that don't continue to compound will fall back, and those that do will kind of rise up or maintain at the very minimum. There are new sort of features that are allowing people to send transactions in batches, which allows the hash rate to increase much faster on the front end. And as the supply gets squeezed on those transactions, it's going to slow down considerably. So there will be phases during the emissions when the hash rate is going to run and it's going to take pullbacks. Maybe it's not going to drop, but it's not going to grow as fast when a decent amount of the supply is tied up. I don't know when that day is going to come. It's going to require a lot of pushing in the meantime, in my opinion. But technically, the hash rate is still rate limited to an extent, not nearly as much as we assumed in the beginning, because we thought maybe 4,000 transactions per block were possible. Now you can batch about 2,500 transactions in a single bundle, one transaction, if I'm doing the math correctly. And you can do 4,000 of those batches in a single block theoretically to maximize how much hash rate is being generated or created or enabled is probably the best phrase for it. How much hash rate is being enabled in a given block. So you're looking at something considerable here in terms of growth rate. I didn't think that was the case before, but it's more important now than ever to commit to that, hash rate generation, securing some for yourself, getting the correlated hardware required for that, and just being consistent, because if you continue scaling for several months, even as the hash rate rises, let's say you want to pull back and gather some profits and see some blocks come in that you can accumulate or hodl or whatever the case may be. The longer that you push, the longer you'll receive a decent portion of the blocks, because the hash rate is going to climb in sort of, a linear fashion still. We reached a new paradigm where it's going up faster, but if you keep up with this new rate and then you stop for a while, your percentage of the hash rate is determined by how long you were scaling up. So that's kind of an important detail, kind of a testament to what loyalty can do in this project in terms of compensation and security and things like that. So all of it points to a higher hash rate. I don't know how it's not going to go insane in the next few months. I've had people talk to me and say that when we reach the next decimal, essentially when we reach 1,000 mega hash, or I believe it's 1 giga hash, we're looking at like a $20 to $30 Bitcoin PoW, and it's increasing. Like I would say at this point, like 3 to even 9 mega hash per day. So that's going to come pretty quick, most likely. I can't predict. I can't really give financial advice. I can't endorse a given rate that a value can move. But if people are using that much electric, putting that many coins toward their mining operations, it just doesn't make sense for the price to be, lower than 10, 15 bucks. So, we're looking at a couple weeks or months out, obviously. I wouldn't really put a time on it. It's not the best thing to do anyway. But hash rate is moving in a fairly linear fashion. Take from that what you will. I'm not going to say anything else is going to happen, but it seems that the hash rate is definitely on the rise. So just something to mention for sure.
Well, I kind of tend to disagree. And this is the reason why. There is only a limited amount of coins that are produced every day. There are 144 blocks, and there is no way around. At a certain point, the hash, hash rate growth will run into the problem of absence of coins to raise it with. And at that point, we're going to see a absolutely different picture. We will see the price of transaction dropping, the price of the coin increasing, the demand for coins increasing, and the speed of even self growth, provided that some of people will have already significant hash power to mine several blocks, it will also slow down. So I think that we are right now at this stage where everyone understands that there is a race, which is about 3-4 months from now, gonna end, and the situation will completely change.
And it's a very unique thing because that variable of the transactions and the fees associated with them and the squeeze on the supply, there was a point I was talking about how there will be a squeeze on it. It will have pullbacks in terms of growth rate. So yes, I do agree with that as well, and I think that any points that I made that contradicted it, they don't completely hold up. But at the same time, the hash rate seems to have sufficient coins with it. The network has sufficient coins circulating in fees to the miners that it's moving much faster than we had seen in previous weeks. So I guess that much I can ascribe to and stick with in terms of a statement. However, I do also agree that at some point people are going to see the value of the coins as speculators buy them and remove them from the mining circulation in a sense because they're not being circulated in the form of transaction fees as frequently. We're going to see something very different play out. I agree with you on that as well. And a lot of these things almost support and stabilize one another, which I like a lot about this protocol. It makes it very unique from other proof of work coins. So many appealing, variables, considerations, all sorts of things like that. So, Richard, I'm curious about your thoughts of it if you're available.
I have a hard time gauging a lot of this with how early it is and how we're still not on a big CEX yet, but I think we're going to get to a certain point the hash rate's going to rise at such a rapid rate. Right now, what we're seeing is just like it's nothing compared to where it's going to be in a few months, in my opinion. It's going to get very wild very quick. There is a window of time right now to take full advantage because it's going to get much crazier.
I agree with Richard. Right now, we are kind of in El Dorado stage of the mining, and anyone with pretty much a pike and a rope to mark the spot has the opportunity to find an absolutely amazing plot for themselves. But in my view, that opportunity window is about 3 to 4 months long. After that, with increasing everyday hash rate and people building, we're gonna run into the different market.
Yeah, and I've seen people who they may have grievances about the entry costs for mining and getting a consistent rate of receiving blocks and things like that. If you want to mine Bitcoin, you got to buy an ASIC too. So there is that upfront cost, and I think people haven't seen much yet in terms of where it could go in terms of the inherent costs that exist for even starting a decent mining setup for this coin. So there's a lot to be said for that, and I think anybody on the fence about it should just look over the majority of the data, see if it's something they're interested in, and just make that consideration that there are people here that are not going anywhere. it makes a difference in terms of the support and the sustainability of a given project. So it takes a little bit to get started, but from there it's like there are going to be larger entities that are very interested in this coin, in my opinion, just from what I've seen and how it's been playing out. No other kind of strings attached to that statement, but at the same time, it just seems like something where if people see scalability in it, they're going to compete for that hash rate to secure it for themselves, and it could definitely get crazy. So I'm on board with all you guys on that for sure.
I have some numbers in that regard for you. Earlier in the podcast, you asked about the cost of the transaction today in US dollars, and I have this number for you. It's 1.8 cents as of today. I used the fuel bot today to measure some um, parameters, and that's one of the numbers. Another number is that the full 35,000 transaction wallet, which is more or less standard size of wallet right now, will cost around $640, which makes a one PC with 10 wallets worth about 7,000, 7,500, somewhere there. And I expect that in 4 months, the same PC will be a little over $90,000.
It's gonna get crazy. I mean, when you think a standard Bitcoin transaction, the price of the asset obviously significantly higher, exponentially higher. However, even without competing for space in the network as much as BitcoinPoW, those fees are several dollars per transaction conservatively. So it's going to be very interesting how this plays out. That's all I'm going to say. The only thing I can hope is that the coin price and the fees run in a correlated or decorrelated manner that kind of balance each other out over time, so that the market remains fair, remains valid, or at least when it bounces out of those kind of average points, it comes back relatively quickly. And I think, like Richard said, there's not much. There's not much calculation possible with how the fees and the dollar cost are going to completely scale. I would say it's profitable if you give it, several months at this point to set up some mining. However, it's so opportune at the moment that I think it just makes sense to make that decision. Obviously, I'm here doing the same sort of thing. Months out, I would imagine they're going to have all kinds of calculations for the rates that the supply gets squeezed from mining, the rates that the coins are emitting, the current fee structure, previous all-time highs and low ranges, or short-term low ranges for the fees, all sorts of things to calculate projected returns for mining. It seems like this Sullivan guy is almost working on those types of things at the moment in a very early stage. It's going to add a whole new dynamic to this. And considering that it's a first mover for this type of consensus, um, it's just awesome to be a part of. And I think, yeah, those mining wallets, they're going to have a check and balance to an extent, because the transactions may increase slightly in value, but also they might not increase in so linear of a fashion, because the hash rate is going to be so much higher. People are going to recognize they're only getting a certain percentage of the hash rate. Now, FOMO is a part of it. It's going to play in, and it's going to support the cost of a fee for sure. However, it's going to be hard to discount the fact that, let's say, having 35,000 transactions the first month or two of the project is a very different situation than having, let's say, 35,000 transactions maybe 9 months into the project. So I do think ultimately the dollar cost will be much higher, but there will naturally be a psychological check and balance that plays in, because people are going to recognize the percentage of the network hash rate that they're securing by, having 35 to 100,000 transactions, for example. So just my thoughts on that. Was curious what you guys think. I'm sure we're all optimistic about the potential for the requirements for mining and all of those sort of things, but I still wanted to mention this point just to see what you guys think. All right. Well, nobody speak all at once. But I guess it's been nice with a lot of new insights from Mining Trucker. It adds a very good dynamic to the PoWcast. I really think it's going to add value long term as he comes and goes as a guest, or whatever we end up doing. But Richard and Sponge too. I'm curious what you think, and yeah.
So, in my opinion, I think just like Mining Trucker said, I think the equipment like preloaded with transactions is going to be a lot. I also think that the fees will drop significantly in terms of like ratio to how much BTCW costs, but it's going to rescale based on the actual cost. So by the time we're at $50, we'll see like lower fees, but it'll still cost relatively the same. So I don't know if we've gone over this before, but eventually I do believe that BTCW will have two different charts or tracking tools. One is obviously going to be the price for BTCW, but the other one's also going to be the UTXO. So I think UTXOs, to a certain extent, and it'll always go up and down in lengths based on like the volatility, the price, and all that stuff. Eventually, it's not going to be worth it to mine opposed to hold, but in 2 weeks, that's going to completely change. So I would say like there's always going to be a point where the UTXO or the actual BTCW is more valuable than one another. But at this very moment, it's kind of hard to kind of convince me otherwise of UTXOs being way more valuable than coins, because if you can tap into 95+% of the supply by just messing around with 2.7 or 2.9, I'm pretty sure it's at 3% now. It's a very good thing. And, it's really hard to listen to people that just don't understand mining and they tell you, oh, it's not profitable, it's not scalable, when this is like still more profitable than Caspa. I know people that are deep into Caspa and they don't make as much as this. Like they don't. And they're spending like $30,000 on ASICs and it doesn't even come close. The KS3s don't compare to like 350,000 transactions.
True, but there can be made and some parallels can be made between mining and the wallets that are filled with UTXOs. If we look at each wallet as a video card, let's say 3070 GeForce, then essentially you're right. The video card carries value. Therefore, the wallets and the UTXOs, they do carry separate value. And like with every market, when the Ethereum was at the peak, the 3070 was selling over $1,000. UTXOs will be equivalent of video cards in the conventional mining, GPU mining.
I agree, and of course, it's going to, as we already know, it's going to become more and more difficult to have these wallets as time goes by. But the beauty of this project is, even having one single TX in a wallet, there's still a very small possibility of hitting a block. I mean, I personally have hit blocks with wallets with as little as 4,000 transactions in them.
Well, I somehow bet that it was at earlier stages of mining, like 2 months ago or so.
Last night I hit a block with a 10,000 UTXO wallet.
Yeah, and less than 3 weeks ago, we had somebody in the chat hit a block with a 400 TX wallet. So there's always that possibility. And we may enter a stage far, far down the road where we have people just literally making wallets with whatever they can scrape together. And there's a very strong possibility they might end up hitting a block at some point. And they will go off that.
I'm not arguing that people will be attracted to the lottery tickets always, but as far as averages, the probabilities of hitting the block with a low transaction wallet will become slender and slender over time.
Of course, no different than Bitcoin or other proof of work. It's just something that naturally happens.
Yeah, eventually it will be like mining the Bitcoin with one of those old USBs and all of a sudden hitting a block. Is it possible? Theoretically, yes. How many people you personally know that did that? Probably less than zero.
Well, like you said, it will fit into your logic because you said that the hash rate and the competition within the next 3-4 months is going to get insane. It's gonna sideline a lot of people, and I would agree to a certain extent, because if we do
Well,
analyze it, we're going to
not
be
sideline. Sorry for interrupting you, but not sideline. Just make the probability of often hitting the blocks very vague possibility.
well. Then that's going to carry out into payout values. So the payout values, if they stretch, and it becomes thinner and thinner, what will happen is people will realize that it's starting to reach a flat price, and that's usually when it starts to go. Usually, when I see the payout rewards start to slowly go down, it just pops back up like a spring. So as long as you're keeping up with the transactions, it'll eventually become worth it to mine. If you keep up with your farm, it'll eventually be worth, um, you know, it'll be worth all the setup. And you can see all these people that are into POWs, they'll tell you the same thing. Like if you expect to come into the bull market and set up a farm, you're an idiot. But all these farms that are being made are usually constructed in the bear at times when these coins are literally in negative profitability. So we're on something that's literally at a 2.6 million market cap, and it's paying out more than some of the most profitable coins that you have to spend, upwards of 7 grand to anywhere from like 35 grand. I'm pretty sure they launched a KS4, KS5. It's like 32 grand. So, you know, we're probably competing with those things, but we're still knocking them out the park, even if we can't have a guaranteed value in terms of time, since it's solo mining. But that's just the nature of it. If it's difficult for calculators to give people like guaranteed projections, then it shows them how trustless this network is, because you cannot trust the values that you put into your calculator 5 seconds after you put them in.
Here's what I expect, that I don't expect the growth to slow down. But in 4 months, I see that the coin will have a significant price development. Secondly, we will see larger capital miners coming into the coin with the price development that will be putting additional squeeze on supply because they will be buying to start building. So when I was giving the numbers, I actually forgot to mention that all the calculations that I did, they were with the current price in mind of the Bitcoin W, not with the not accounting for the price development, because that would make absolutely, I wouldn't say impossible, but very difficult to project. But if you remember, Sponge, we were discussing recently the creation of the mini PC filled with 10 wallets, 350,000 transactions as a sort of a standard miner for the BTCW. Well,
I think the standard is eventually going to be much less than 350,000. I think that eventually the standard will start becoming like 30,000 or 50,000, and it'll start scaling lower and lower and lower.
that could be, but as of right now, it's I would say, some kind of optimal PC to make, right? I mean, wouldn't you agree?
Oh yeah, I agree 100%. At these like current points, telling people to stay comfortable with 70,000 transactions is it's borderline theft. Like if they know the extent of this project, they would really be getting as close as they can to 50 million transactions. And shout out to the
So,
people who actually are. You know who you are.
so I
They
was
keep their
thinking
fingers stuck to the keyboard. They don't run away. They keep sending transactions.
exactly. So I was thinking in terms of that kind of standard PC, what is the cost today and what the cost of such PC would be 3-4 months from now. And my projections are that if today the cost of the PC is around $7,500, we're gonna see with the supply squeeze the price of around $90,000 per PC, which is more expensive than a traditional Bitcoin ASIC.
Right. So
Yeah, I would have to agree because I think that especially before the halving, let's say the fees drop considerably and you're only getting like 55 BitcoinPoW per block. Um, if there is any legitimate price discovery and a supply squeeze here, people are going to recognize that the perceived reward of a block is going to be so much higher as well. So, the greed and the FOMO is likely to drive a lot of that momentum for the cost of a full PC full of transactions, hosting maybe 300, 500,000 transactions. It's a fair stake. And if you look at it like how people look at the thumb drives, the USB type things that would be like small scale ASICs back in the day, mining Bitcoin, or even if you use one of them today, um, it's a bit of a risk that a person is taking in buying it if they don't know if or when they're going to hit a block. But if they do, it kind of pays for itself like 15, 20 times over also. So it's kind of those are really rough example numbers, and I'm not even relating them to BitcoinPoW in a sense. It's just kind of very arbitrary. But at the same time, yeah, I kind of have to agree. It would be higher than the cost of an ASIC because hitting a solo block is a much more impressive feat on a coin with a high hash rate than pool mining for weeks on end and collecting smaller amounts of revenue through those means. So that's all I wanted to say.
Thing is that right now we are in the area where the hash rate can increase linear or above that. Within 4 months, we'll come to the period when the line of the hash increase will be below linear progression.
And
At
that's a
least that's
great
how I see it.
Yeah, no, that's a great insight. I think it makes a lot of sense too, because the speculative market is going to have a completely different restriction on the supply in the coming months. And everybody's going to want a fair stake in this project, regardless of which side they're on. So the competition for the supply, it could get very intense. I would have to agree. So it's almost good that the emissions are where they are because in due time, there's still not going to be enough to keep up with demand. So, very interesting concept, very good insight, and yeah, Sponge. I can't help but think that we kind of jumped in at the same time. So, if you had any comments, feel free.
no, I was just saying yeah. Yeah. I was literally just saying yeah, but I think that the main difference between Bitcoin and BitcoinPoW is that in Bitcoin, the miners and the holders hate each other. They always talk shit about each other. The holders don't hold that much, and then they say, "Well, you guys keep fucking market dumping on the network." And let's be real, like there's still money outside of this world that can still attack Bitcoin. So if they want to, they can just ever dump the fees when they mine. It's just like Richard's talked about it before. Not just Richard Hart. It's kind of prominent. There's only 3 like manufacturers that create the ASICs to mine it. So As decentralized as Bitcoin seems, it's really not that decentralized. And with BitcoinPoW, I'm not going to give out specific information, but all I'm going to say is that it is well the opposite. And I would, you can argue that it's just the beginning and it's easier to access coins and it's cheaper and all that stuff, but it doesn't matter. People will not enter it if they don't want to, and that's why we're only at $3 at the moment. The second people really pick up wind of this, it's going to be going insane. And I think that the arguments over coins are going to be less toxic than the reverse dynamics that traditional and stupid Bitcoin does have. Because I think we're smart Bitcoin. I think that we're actually like the wheel spinning faster. So this mechanism almost has a lot of characteristics similar to Hex, and people can see how well Hex performed in a single cycle. So I think that PoW is going to be able to support its system like that as well, because people didn't really believe that like Hex was a proof of work, proof of weight, formula, but that's only because it was a smart contract on Ethereum, and then Ethereum went to proof of stake, and people can argue that it kind of sucked after that, but this kind of proves that you can have a proof of weight mechanism attached to a network, in a sense, because there is sort of like a burn mechanism that's put in with every single miner with their max wallets. They take away a portion of the supply that'll never be touched unless they're stupid.
And that argument highlights very well with a quasi deflationary system mechanism that is put into the BitcoinPoW. Because every single UTXO, once it's created, it is not going back at its face value. No way, because it carries so much more potential within it. So every single miner creating UTXOs takes the supply out. And this is awesome because that's a Bitcoin that is not only stable and scarce, stable, scarce, and deflationary.
It's also a Bitcoin that distributes itself really well. When one person buys and gets into mining, they're feeding all that value to other people. So while they're sending transactions, those fees go to any random person that's mining a block, and you're not subject to cut corners or do anything that'll get you ahead of the game, except for picking up your hash rate. If you have a bigger hash rate, you have more sway in the market, and it's completely natural. It's completely fair. So
I got into the BitcoinPoW the moment I understood that utility of the coin is built into the coin. This is just absolutely ingenious idea, and I think this will propel the BitcoinPoW to the next absolutely level compared to any other cryptocurrency existing at this point, because everyone needs to come up with some kind of utility. This one has utility being built into itself. This is just amazing to me.
in my opinion, that's going to further incentivize people to keep building on top of the foundation of it. It's going to encourage more developers to come to it. It's going to encourage a lot of people to actually be able to, create something that more people can actually get onto and benefit from. I honestly think that the whole mechanism that's created allows the miners and the holders, like I mentioned 2 minutes ago, to actually unify a lot stronger than traditional Bitcoin. But that also comes with a lot more than just like that being said. Like it's not just going to be, oh, here's your coins, have a nice day. It's a major introduction platform because this offers a lot more wealth abundance to the people that actually structurally create Bitcoin. It doesn't allow cowards to run away after they mine a certain hash power. Once you're in, you're in. You have to, if you think you made enough and you want to slowly dilute yourself out, you can kind of just stop like running or jogging. But to an extent, the miners that want to keep up with the pace of the network have to keep moving. And like, to be real, no matter how much money like people throw into transactions and building, like eventually it'll be impossible to outpace the growth that people put in, because it'll only take like 100,000 people building like a single wallet, and it'll be impossible for a single individual to uh, take advantage of the entire value of the chain. But at this very moment, even with how centralized it may seem with the blocks being hit, it's still impossible to 51% attack this network. It's still impossible to take us to sub $3.50. It's literally impossible to like watch the hash rate and expect it to go down and bet on it going down within like a 7-day period. It always picks back up within the 5th or 6th day, or the 4th day or 3rd day, and the spikes are just insane. It's like a chart too. So I think there's a lot of characteristics and dynamics of this project that no one knows about, and they won't understand until it's too late, and their friends are already talking about it, or it's it's getting listed on other places, and it's starting to expand and scale. But yeah, my main point is the abundant wealth and value that's being added to the miners is only going to further accelerate the network and the growth. And I think that when we start hitting our phase where we have the freaks that are running the ordinals and the PoW 20s, like I think that it's probably going to be like the greatest time to be alive to mine it, because you'll be getting fees out the yin yang, and people will be trading quote unquote fair value on JPEGs. But inscribe all the sats you want. Thank you.
I just think that sooner or later we're gonna see some developers showing up and building a UTXO exchange for BitcoinPoW.
Right.
I
I
agree.
totally
There
agree.
will be some sort of handoff between the miners and the market, because it's been talked about. It's literally like it's been said in the white paper that they're hinting towards something that was not said in the white paper, because it literally says hint in it. So I would put two together and assume that something is happening in the background to kind of create a value splitter for the individual 1,000 sats that are associated with that transaction. So there may be a possible handoff ability, and once there is, then I think that the whole market is going to completely change. If there is an actual value that can be transferred over to other people in terms of mining, and it's in the 6-figure range, it's going to really turn a lot of heads, because they're going to say, oh, like this isn't sustainable. It's not sustainable. But it's clearly sustainable, because the hash rate's only going up and the price is slowly supporting it, and the market is moving up. So there's kind of a safety net to it. When the market's moving, there's only so much a coin can go down unless it's completely going to the shitter. And I don't think something that's built as strong as Bitcoin with an extra layer that makes it even better is going to come even close to the possibility of failure.
And I think that's a really good point. The market is a form of support, like the larger market surrounding it. And I think it's a great thought to finish up on as we approach the bull run. I mean, I was looking at Bitcoin at maybe 42K about a month ago or a month and a half ago. I could be wrong, but it was in the low 40s for sure, and it was already impressive to me. So we're looking at new paradigm type stuff, and I think the same could be said here with what we're talking about. But guys, we're pushing just over an hour. I'm just thinking, so we have a few new concepts for next week, and so viewers don't get too worried about the length of the video in terms of considering watching it. I think 30 to 60 minutes is a great time frame. So I really want to thank everybody for their time, and yeah, it's been a great episode. So if you got any other thoughts to wrap up, I'd be more than happy to have those in too.
Well, thank you for having me today, and I hope that next time we'll have a little game of price prediction.
Yeah, I think that would be cool. I think it's going to be a little more clear in the next week or so as well. So, all things considered, guys, it's been awesome. Thank you all for showing up and doing your part, just adding to the conversation. But Sponge and Richard, if you guys have anything either, more than happy to hear about it.
All I'm gonna say is $5 next podcast.
All right, nice.
That's very fair. It could definitely happen. It might happen sooner than that, of course. It's we had a nice little bit of momentum just not too long ago, so we'll see.
And with that, guys, I'm gonna wrap it up. Thanks to everybody for tuning in, and we'll see you soon.
All right. Good
Thanks
night.
for having me again.